I'm Emily Chang, and this is Bloomberg Technology. Coming up, the world's most popular cryptocurrency spiked during its Wall Street launch. We'll break down its first day on a major U.S. exchange. Plus, the countdown continues to Thursday's big vote at the FCC. Who will hold service providers accountable if net neutrality is rolled back? And why the era of smart speakers is raising new concerns about big tech eavesdropping in the comfort of your own home. First, to our lead. Bitcoin's big Wall Street debut. Futures in the cryptocurrency surged as much as 26% in their first session on the Cboe exchange. The contracts thrusting the cryptocurrency right into the realm of regulators, banks, and institutional investors. Here to give us highlights on the day, we're joined by our Bloomberg News Markets reporter, Julie Hyman, who's in New York. So, Julie, walk us through the day that was.
So, indeed, we saw some surges really in the first few hours of trading. And, of course, the Cboe has circuit breakers in place. So if we see a surge of 10%, there's a 2-minute pause in trading. If there's a surge of 20%, there's a 5-minute pause in trading. So there were 2 of those circuit breakers that were triggered. But besides that, we were hearing from traders that trading was fairly orderly. Really, we saw the early surge in volume. And if you look at the Bloomberg, you can see that the price action as well kind of leveled out over the course of the day. That's what you see on the top. Volume is on the bottom. Total volume over the course of that first 24 hours of trading ended up being around 3,900 contracts. So not crazy volume in terms of the notional value of that compared to the underlying value of what we see on a typical day for Bitcoin itself. Through the first 12 hours or so, we saw about $40 million notional Bitcoin traded tied to those Bitcoin futures. That compares with $1.1 billion of Bitcoin traded during the same time. So that just gives you an idea here. It is early days. The Cboe CEO, Ed Tilly, says he does expect things to heat up a little bit as participants watch the first few days of trading and then decide if they want to get in, Emily.
So, Julie, talk to us about the significance of this as a historical moment where now we are seeing a cryptocurrency traded on a major U.S. exchange.
So basically what it does is now ties Bitcoin trading, or a Bitcoin-tied product, introduces it into a regulated market. So whereas many different traders and investors would not be allowed by various regulations to invest in Bitcoin itself, they might have access to that Bitcoin futures market. What's interesting is we are not necessarily seeing the big banks trade on their own behalves in the Bitcoin futures market. For example, Goldman Sachs has said it might be making markets on behalf of clients. And again, Tilly of the Cboe said we're seeing 22 participants in the market allowing trading either on behalf of clients or themselves. I also talked to the CEO of Interactive Brokers, which is handling a lot of the volume of this Bitcoin futures trading, as much as half of that trading, although he has a lot of reservations about Bitcoin futures and the risks that they might have.
So are you still hearing skepticism from investors and traders, or are they in on this now because they have to play the game?
No, there's definitely still skepticism out there, for sure. There is still a lot of discussion about whether or not it's a bubble. There's discussion that even if it's not a bubble, what are some of the risks that might be associated with it? Something to point out that's interesting here is that Interactive Brokers is among those that are allowing people to trade Bitcoin via their platforms, but are not allowing shorting and are requiring that folks put down 50% margin or 50% collateral when they're making these trades. So there are still some high hurdles for investors to go over in order to invest in these Bitcoin futures as a sort of fail-safe, or at least that is what they are supposed to be. So that's one of the things that folks are watching. The other thing I would point out is that there's still a very wide spread between underlying Bitcoin and Bitcoin futures. Now, as I check the Bloomberg here, Bitcoin futures are trading at $18,500, which is still a pretty steep premium to Bitcoin itself. One of the reasons perhaps is that we're not seeing shorts come in to that futures market and cap the interest. Another reason could be that while some investors are allowed to buy that regulated market, those Bitcoin futures, they're not allowed to necessarily buy the underlying. So we're not seeing the arbitrage bring that gap together. We'll be watching to see if it does in the coming weeks.
All right, Julie Hyman on the Bitcoin beat for us in New York. Julie, thank you so much. Quick breaking news headline we are getting in from Reuters that Comcast says it is no longer reviewing 21st Century Fox's assets. We had been reporting that Comcast, along with Disney, were in talks to potentially buy 21st Century Fox. Disney, as far as we know, is still engaged in those talks. Comcast, no longer engaged. Sticking with cryptocurrencies, I want to bring in Blockchain Capital Managing Director Spencer Bogart. Blockchain Capital is a venture capital firm investing in blockchain-enabled technology companies. In 2013, its initial fund was the first VC fund dedicated to the Bitcoin blockchain ecosystem. So, Spencer, we heard Julie's rundown there. What do you think was the most significant thing that we saw happen today?
Overall, it was better than expected. I mean, we saw volumes at a reasonable level, and we saw 2 trading halts on the upside. I mean, I don't know what more you would wish for. I mean, this is the beginning of the institutionalization of Bitcoin, right? I mean, first we have SIBO rolling out. We have CME next week, which is a much, much larger trading venue for derivatives. And then eventually we might lead to an ETP in a year from now.
Let's talk about value. I mean, as the price goes up significantly day by day, I mean, there's a lot of questions about where that value is actually coming from. What do you think?
Sure. I like to think of Bitcoin as an iceberg. And up at the top, at the tip of the iceberg, as people are coming up to it, they see a payments mechanism, right? Because they hear cryptocurrency, they think about Bitcoin as payments. But what's really that center of buoyancy, the reason why people are ultimately buying, is as a digital gold, right? So people want to own a portion of this decentralized, permissionless, unseizable, and highly censor-resistant network, right? And then lurking below the surface, we have this natively digital and programmable asset. And this is actually one of those things that I think is most underappreciated and most interesting in the ecosystem. I mean, ultimately, the concept there is when we take something from the physical world and we make it entirely digital, we shed many of the constraints of the physical world, and we can actually have programmable money. This is actually software eating the world of financial assets for the first time.
We know other exchanges are poised to start trading Bitcoin futures as well. Do you think more and more will follow? What's next here?
Absolutely.
And more cryptocurrencies?
Certainly. I think that it all starts with Bitcoin. So I think next week we see CME come out. NASDAQ has plans to launch futures trading in 2018. And then I think we'll see a proliferation onto other exchanges and into other assets. This is a global phenomenon. We should contrast that with, for example, the dot-com boom, where very few people actually had access to participate in that kind of a booming market. That's not the case with Bitcoin today. Anyone with a smartphone anywhere in the world can participate in this market. It's remarkable.
Well, certainly they can participate now that it's being traded publicly, and they could in the dot-com boom / bust. Where do we draw the line between what is legit and what is not legitimate?
That's fair. I mean, you know, to be honest, so far I think the SEC is doing a great job of kind of doing a light hand approach. They're stepping into the ecosystem and have kind of swung the axe around on a few projects that really weren't credible at all. And I think really doing a favor for the ecosystem as a whole.
What do you think we'll see in terms of regulation?
It's a good question. It's a long road ahead. I think there's a lot of unanswered questions, but I think that overall regulators have seemed pretty keen to make sure that they don't toss the baby out with the bathwater here, and to make sure that we really make sure that the innovation does not flee to other jurisdictions. So again, you want to create a safe environment, but also not discourage that innovation.
So with Bitcoin becoming more mainstream, you know, this is a very significant step. How does that change your business?
Yeah, absolutely. I mean, for us, it's the same as it's always been. Starting 6 years ago, Blockchain Capital's been investing into the blockchain and Bitcoin ecosystem. We'll continue to do that. In general, we're not holding the large assets that people can do themselves, right? So we don't want to charge LPs for access that they can already do, but we are looking for is new opportunities in the space, and there are a lot of unanswered opportunities right now in building out this parallel financial system of crypto assets.
So talk to me more about those opportunities. What do you mean?
Sure. I mean, we're looking at things like decentralized exchanges. So can we remove counterparty risk from the equation? A lot of it is building up actually a lot of the same kind of functions that we've seen in traditional financial markets, but are now happening in this new parallel natively digital ecosystem. I mean, if we think about the traditional financial system, really things like PayPal made it easier to spend value in a digital world, but they didn't change the back-end infrastructure, right? Blockchain and these public crypto assets, these are new financial infrastructure for a digital age.
So do you think Ethereum is next?
I think that that's the most likely candidate if we're thinking about other futures trading, other maybe ETP products that could come out. Ethereum is the natural number 2. It has the second largest market capitalization and the second deepest market after Bitcoin itself.
And then, at what point do we see a critical mass? Are we just going to see like a handful of these cryptocurrencies traded, or will we see, there are hundreds and hundreds of cryptocurrencies, right? How many of those will end up in this more sort of legitimate form?
Sure. So as part of this kind of permissionless evolution of financial markets where anybody can create one of these things and put it out into the world, there's already thousands of them. I would expect very, very few will ever find their way to major mainstream markets like we're seeing today. But other
like
than
a handful, a dozen?
I'd say probably half a dozen maybe will make it in the next 2, 3, 5 years. And then after that, the long tail is anybody could guess.
So what do you think is going to happen tomorrow? And what are you going
with
to be
tomorrow's
watching
trading?
the
The
rest of the week?
I'm going to stick with the trend here and say that we're going to get 2 more trading halts on the upside.
All right. Spencer Bogart of blockchain-focused venture capital firm. Thank you so much for joining us.
Thank you for having me.
We'll be watching the rest of the week to see how things go. Continuing developments on this Comcast Disney story, Comcast saying they were never at an engagement level to make a definitive offer for 21st Century Fox. Again, we reported earlier, this coming from Reuters, that Comcast is no longer engaged, no longer looking at 21st Century Fox. Disney, as we have reported, has been looking at potentially acquiring 21st Century Fox. We have reported that a deal could come within days. That's coming up. We're going to be talking a little bit more about Uber. This is Bloomberg. London's 3.5 million Uber riders will be able to use the service through the spring as the company appeals the city's decision to revoke its license. Westminster Magistrates Court announced the appeal hearing between Uber and Transport for London will not take place until April or June. For more, we are joined now by our Bloomberg tech reporter Eric Newcomer, who of course covers Uber, and Bob O'Donnell, Technalysis Research President and our guest host for the hour. So Eric, Uber obviously has more time now. We were expecting some sort of appeal and that this wouldn't happen right away. But what does this actually mean?
This gives them more time to negotiate with the City of London. I mean, you sort of want to think of this as dual track. I mean, there's this legal process, but probably more importantly, there's a direct negotiation with regulators. And I think Uber is very hopeful that before this ever goes to court, they'll come up with some negotiated truce with the City of London. I think that's what's going on at the moment.
How hopeful are you? I mean, what is the likelihood of that?
I mean, I just think, Uber is an essential part of many major cities, including London's transportation infrastructure. I've always said that it's hard to imagine London actually asks Uber to leave. And so then I think it's how do they meet somewhere in the middle so that the city can get what they want. I think Uber under Dara Khosrowshahi is certainly much more willing to negotiate and try and come to sort of a negotiated settlement with cities. So I think there will be a resolution. It's just a matter of finding some happy place in the middle.
And yet Uber is fighting these battles around the world. Bob, how much of a concern is it?
Well, I mean, the issue is when they come up with these compromises, which obviously they're going to have to do, how much does that impact their business model? I mean, it seems to me that some of the steps they're going to have to take are going to have to involve things where they provide perhaps some kind of benefits to the drivers or other kinds of things that I think have an impact on the way the company is valued. So I think long term, as they create these compromises, which they're going to have to do, it will impact the long-term evaluation of the company.
Could something like that be part of this compromise?
Yeah, I mean, the irony for Uber now is that in so many places, it's the incumbent. So any rules that prohibit new entrants could in some ways be good for Uber. Now, obviously, Uber's meant to be a lightweight business that relies on independent contractors. Anything that sort of raised costs on labor will, could hurt their business. But on the other side, if it blocks new entrants, that could be good for Uber. So I think it's hard to read too much into these things until you see the exact language.
Now, still no resolution on the SoftBank deal, and the deadline is fast approaching. What is the latest on that?
Yeah, it's going to be a fun Christmas time. Last I heard, it could be like December 28th when a lot of this needs to get resolved on the first price. So we have this implied $48 billion valuation for the secondary shares, and people are sort of puzzling over whether they want to offer up their shares to participate in that price or miss out on it and hope that that forces a higher price. So people are doing some soul searching about what they think their shares are worth.
Are employees concerned? The employees who are hoping that they will be able to sell shares in this offering?
I mean, I think the early employees, the type that have access to this deal, are going to see such an enormous sort of gain in value over what they got their shares for, that they're probably the most likely to be excited to have sort of this moment of liquidity than anything else.
Of any kind.
Yeah, exactly.
No matter what the value is. Okay, Eric Newcomer of Bloomberg Tech, thank you so much. I know you'll keep us posted. Bob O'Donnell, you are sticking with me for the hour. All right, President Trump wants astronauts' boots on the surface of other planets. The president signed a directive instructing NASA to send American astronauts back to the moon and eventually to Mars. No details have been given on funding or whether any current programs would face cuts or whether NASA would rely on private industry. Since retiring the space shuttle program in 2011, NASA has contracts with both SpaceX and Boeing to send astronauts into space. Coming up, an equal internet for all. That is what the FCC will be voting on this Thursday. We'll look at the possible repeal of open internet protections next. And here's a look at after-hours trading of Comcast, Disney, and Fox. Comcast has now confirmed it is no longer reviewing Fox assets for a possible purchase. We'll continue to cover this story. This is Bloomberg. Nice. Verizon is betting big on the NFL. Starting in January, Verizon mobile customers will be able to stream NFL games through Yahoo, NFL Mobile, or Go90 apps for free. That includes no data charges. Meantime, non-Verizon subscribers will only be able to use the Verizon-owned Yahoo service without a subscription fee. The 5-year contract is said to be less than $2 billion. This Thursday, the FCC plans to hold a vote to decide the future of internet protections known as net neutrality. And some big names are starting to take sides. Oracle is siding with the rollback, while Amazon has announced it's opposed. Now, one of the main complaints net neutrality defenders stress is who will hold the ISPs accountable once protections are rolled back. FCC Chair Ajit Pai announced today that his agency and the Federal Trade Commission intend to enter into agreement where the FTC will effectively police the internet. Joining me now to discuss, Bloomberg's Todd Shields, who covers the FCC, and my guest host for the hour, Bob O'Donnell of Technalysis Research. So, Todd, first I'll start with you. We saw new moves happening today. This statement from the commissioner about the FTC's involvement here. Break down what happened today.
It was an announcement between the FCC, Communications Commission, and the FTC, the Trade Commission, and like everything else in the net neutrality debate, it instantly ran into controversy. For instance, one of the leading Democrats on Capitol Hill, Representative Pallone from New Jersey, called it essentially worthless. It's a way for the FCC purportedly, or I don't mean to cast doubt on it, it's a way for the FCC to join hands with the Trade Commission in enforcing the procedures to be followed, which critics say don't really hold water very well.
Right, and others, as you said, believe they don't hold water. We spoke with former FCC Chair Tom Wheeler, under whom net neutrality was passed. Take a listen to what he had to say.
In the name of consumer protection, they say they're not going to protect consumers. In the name of better regulation, they say they're going to turn it over to the FTC, but yet an FTC commissioner, Commissioner McSweeney, this afternoon tweeted that even if they do that, the FTC doesn't have any authority. They're just running away from their responsibilities.
So, Todd, does the FTC have authority or not here? And can we expect them to do this? Right.
Yeah, like everything else in this debate, yes and no. The commissioner that Mr. Wheeler referred to is a Democrat who says, no, we can't quite do the job. Democrats in general oppose the upcoming rejection of the rules. The Republican acting chairwoman of the Federal Trade Commission says, sure, we can do it. But there's a catch here. The Federal Trade Commission works ex post facto, if you will. It looks at practices that are unfair and essentially whacks companies for doing things that are unfair. The Federal Communications Commission sets rules and say you may not do certain things. So there's a prescriptive or a forward-looking aspect to the FCC's rules that would be absent under Federal Trade Commission jurisdiction, although proponents of the FTC say that the prospect of being whacked by the FTC is enough of an incentive for companies to behave.
Bob, what do you think this means for not only consumers, but for big tech companies, which, as we said earlier, are split?
Well, it's very ironic, first of all, that on the one hand, you've got the FTC wanting to block the AT&T Time Warner, in fact, for some of the very reasons that net neutrality was designed for, and yet then on the other hand, you've got them wanting to get rid of net neutrality rules on the FCC. So it's a very odd, disconnected kind of thing. But, you know, if we look at how much traffic on the internet is video, it's 50% now, it's going to be 75%, which means the biggest impact is going to be on video services. So I think the issue is going to be, how do people package video services, and can we look at comparisons to what happened with mobile internet, where all the big carriers started packaging some of the video services at no cost to their subscribers as an incentive to get them to go to their service. I think we're going to see a lot more of those kinds of deals and packages, which all of a sudden ironically translates this big open internet into something like a cable TV package where you have a more limited choice of options. So that's what I think is a real possibility.
So you think we'll see we'll have different experiences on different...
Well, I think what it is I think that there will be taxes built into the cost of certain services. So if you're with a particular carrier, a particular ISP, you'll get a certain number of services for free, but other services may be a little bit, have a cost associated with them.
All right, Bob O'Donnell of Technalysis, you are sticking with me. Todd Shields in Washington. Todd, we'll continue to watch your reporting. Thank you.
Thank you.
Coming up, Bitcoin futures strong debut. We'll hear from Ed Tilley, Cboe Global Markets Chair and CEO, next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg.
Thank you.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. The White House says today's pipe bomb explosion in New York City's subway system shows the need for immigration reform. Authorities say Kayed Ullah, an immigrant from Bangladesh who arrived at the U.S. 7 years ago, set off the pipe bomb near Times Square, injuring himself and wounding 3 others. President Trump says the lax immigration system allows inadequately vetted people into the country. And the White House is pushing back on sexual misconduct allegations against President Trump, saying he has already denied them. 3 women who previously accused Mr. Trump of sexual harassment are calling for a congressional investigation.
I'm here to speak on behalf of the president, and I can say that the president has directly responded and said that these allegations are false, and that's what I'm doing and relaying that information to you. In terms of the specific eyewitness accounts, there have been multiple reports, and I'd be happy to provide them to you after the briefing is completed.
Former Trump campaign officials Paul Manafort and Rick Gates were back in court today for a status conference about their conspiracy and money laundering charges. The judge deferred a decision on a proposed bail package for Manafort. She also scolded him for discussing his charges with foreign news media. European Union Foreign Policy Chief Federica Mogherini says the EU reiterated its position on Jerusalem during talks with Israeli Prime Minister Benjamin Netanyahu. Mogherini has joined many EU leaders in expressing disapproval of the U.S.'s decision to recognize Jerusalem as Israel's capital.
During the exchange we had with the Prime Minister, almost 2 hours, myself and the 28 foreign ministers, we underlined that a lasting peace between Israelis and Palestinians remains a top priority for the European Union, and we have a consolidated and very much united position.
Netanyahu, on a first official visit to the EU by an Israeli premier in 22 years, said recognizing Jerusalem was merely stating the reality that's on the ground. Theresa May has given in to critics who want Parliament to have more power to scrutinize the government laws that are needed as part of the Brexit process. May's official spokesman, James Slack, said the Prime Minister has accepted a change to the EU withdrawal bill, the crucial draft law that's preparing the way for the UK's exit from the bloc. Global News 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg, and we'll have more of Bloomberg Technology with Emily Chang coming right up.
This is Bloomberg Technology. I'm Emily Chang. We turn now to a developing story. Disney is now the sole suitor in pursuit of a deal for Fox assets. Comcast is saying it is no longer engaged in review for these assets. Comcast saying in a statement, we never got the level of engagement needed to make a definitive offer. Joining us now, Bloomberg's Anusha Sakui. Still with us, Bob O'Donnell, president of Technalysis Research, and our guest host for today. So, Anusha, we've been reporting that, these long talks with Disney, that a deal could come in a matter of days. What do you read into this statement now from Comcast?
Well, this kind of has come out of the blue, really. We really weren't expecting a statement at this point. We probably expected it to go down to the wire, and it's just quite fascinating, the comments that you read out there that they made, that they never really got that deep into analyzing those assets in terms that it was really, they just had to, look at it and sort of like, their responsibility to shareholders, which sort of suggests maybe they were just a stalking horse for Disney and not really that motivated to do it. We don't know if that's just, maybe PR spin, but it is a very interesting development today and really does put focus things back onto Disney. And, here at Bloomberg, we have been reporting that from, a Fox perspective, Disney could be a better candidate from a regulatory standpoint because, they potentially have less conflicts than, say, Comcast Fox deal, which, given some of the decisions from the DOJ, might be problematic.
So explain that a little bit more to me. Why do you think Disney may make a more practical suitor, if you will?
Well, it's interesting because I think even people that are sort of closely involved might not be able to read the DOJ that closely because we've also had this sort of interesting read on the AT&T Time Warner deal where it seems that vertical mergers are not so straightforward as you might have, as some people in industries might have expected, and so maybe a horizontal deal with a peer like Disney might be less troublesome because clearly with AT&T and Time Warner, the DOJ was indicating that some kind of behavior remedy has happened when Comcast bought NBC and Universal. It's not really going to be. It's not something that they really favor anymore. So with that, sort of recent sort of read of a deal, that's my understanding is that partnering with a sort of more of a peer like Disney is potentially a bit of an easier sell to regulators to clear the deal. And another thing to think about is Disney's ability to buy the rest of the outstanding Sky shares, which Fox is in the middle of bidding for. And under UK rules, typically Disney would need to pursue that deal. You can't really withdraw an offer once it's made in the United Kingdom, and you can't change the price any lower or anything like that. So, and Fox has faced a difficult trial with regulators there in terms of the amount of media assets they own in the UK, making it difficult for them to buy Sky. Obviously, the jury's still out on that. The decision has been delayed until January, so potentially that deal could have still been cleared. But Disney doesn't have the same conflicts that Fox does. So again, makes it easier for them.
Bob, what do you make of this latest twist? Comcast saying we're not in anymore. In fact, we were never really that far into it anyway.
Well, I completely agree that I think it's because of what's happening with AT&T Time Warner from the DOJ, to clarify my mistake that I made in the last segment. On the DOJ perspective, you clearly got this concern that as ISPs try to work together with content companies, there is going to be some friction there. Whereas you've got two content companies that come together, it makes sense. And they're mostly focused on the movie and TV piece. That's not the Fox News, it's not the Fox Sports. That remains separate. So to me, it makes a much more logical sense as a combination between the two of them.
All right, well, we'll continue to follow. I know Anusha will keep us updated. Anusha Sakui with us from Hollywood. Thank you, Anusha. Bob O'Donnell of Technalysis. You are sticking with me. All right, another top story of the day, the debut of Bitcoin futures on the Cboe Global Markets Exchange, a huge move to legitimize the digital currency as its market cap tops nearly $280 billion. Cboe Global Markets CEO Ed Tilly joined Bloomberg TV earlier and talked about the appetite of participants so far.
It's meeting expectations really in the early days as open interest is building. Our dedicated liquidity providers are getting comfortable trading a new commodity in this case. So it's business as usual from a launch perspective. 3,000 contracts, as you point out. That's a lot of 1 and 2 lots, and that's a lot of our participants getting ready and scaling up. So I expect to see a little change in that, in those transactions over time.
I'm curious, when you talk about your participants who are involved in this, who those participants are. I mean, we've talked to some of them, the traders who are based down at Cboe, but I'm curious what you're also hearing from larger institutions, whether they're nibbling yet, whether they are giving you any indications that they might be moving into the market.
Yeah, let me give you some perspective. So at launch, we had about 12 known participants. Those are registered traders on our CFE. We're up to about 22, and they represent various end users. So we won't see that clarity for quite some time, but you can see from 12 from the launch up to 22 during the U.S. trading day. That's a big change, and I think we'll see that build over the days and weeks to come.
Some commentators are saying that the fact that you priced from Gemini might be a disadvantage given that CME is going to take pricing from a few different exchanges. Any plans to expand that?
Not at the moment. We're really pleased with the partnership with Gemini, the transparency into their auction price, them knowing their users, and information sharing from our regulators' perspective was very important. Ours is a very tradable, trader-friendly contract in that the moment in time on settlement, you're really indifferent whether you're holding Bitcoin futures or the actual physical Bitcoin. We like that construction of the contract.
And is there any change, I'm curious, also planned to offer a physically settled contract? Because that was something that I know got a lot of attention.
It did get a lot of attention. At this point, we're really pleased with the rollout. We're going to stick to the futures contract. I think you'll see some buzz around the potential for security ETFs and ETNs as a result. I think that'll take some time, but I think you'll see that as the next frontier in the evolution of bringing Bitcoin to a more broad base of users. But that's got to get the SEC ready, and they're going to have to get comfortable with that oversight.
Yeah, what other contracts might come out of this? Mini contracts, other types of trading derivatives?
I think we will see derivatives. We need to get through a number of different settlements, whether it's our settlement process with Gemini or our competitor's settlement process with an index. I think you will see derivatives as a result, but it'll be in the months ahead. It should not be in the weeks. And as I say, it'll be a longer process getting our regulator, the SEC, ready for ETFs and ETNs.
Well, and as Bonnie said, what about a mini contract? Because when you're talking about 16,000, 18,000, I mean, that's a pretty big piece to bite for retail investors, certainly.
It is, and we're 1/5 the size of our competitors' contracts, to give you some kind of a scale.
Right.
There might be room for a mini contract in the weeks and months to come.
I'm very curious about whales and the potential for whales and the idea that somebody can see some price action, figure out who actually is in the market and maybe corner it somehow. How are you staving that off?
Really difficult to do. We are a very transparent market. Our information sharing with Gemini allows for us to have transparency into their process. And then we're used to regulating a futures market. So we have the cooperation of all of our users. So we know our users, and we'll have the accessibility to look back, reconstruct trades, and share that with our CFTC, our regulator.
But won't it be too late by then if a whale does indeed appear?
It would be difficult. You have to affect the price of the currency across multiple exchanges. If, for example, you used the Gemini auction as a reference point, we have collared that auction with an index, GBXT. So we'll be looking not only at the settlement price from Gemini, but that settlement price has to fit within an index of other Bitcoins.
That was Cboe Global Markets CEO Ed Tilly there. Well, the Golden Globe nominations were just announced, and Netflix tied with HBO for the most nominations, each with 12. Some of the shows nominated from the streaming platform include The Crown, Stranger Things, and Master of None. Meantime, the other major streaming services, Hulu and Amazon, got 3 nominations apiece. Coming up, it is music to Apple's ears, why the tech giant acquired music identification service Shazam. Next, this is Bloomberg. Apple has confirmed it will acquire Shazam. The music identification service was an early iPhone hit, but has struggled to find ways to monetize. Terms weren't disclosed, but it was reportedly valued at $400 million last week. That is significantly less than its $1 billion valuation after it closed a funding round in 2015. Joining us now, Bloomberg Tech's Mark Gurman, and still with us, Bob O'Donnell, president of Technalysis Research and our guest host for the hour. So, Mark, why is Apple buying Shazam?
Yeah, that's a good question. I don't know because, I have a few theories, but Shazam is already integrated into Siri. So what you can say is, hey Siri, what song is playing? Whatever song is playing in the background, it'll tell you the name of the song. Why do they want it? One, it gets a lot of good data. They have a lot of users. They're currently on Android. So it gives them another foothold on Android. Maybe they'll close the Android app, maybe not. We'll see. We also have seen reports that other companies were trying to buy Shazam. Now, Shazam is a key component. It's a big-time iPhone app, like Apple said in its statement. What happens if a competitor, Snapchat, Spotify, someone else buys Shazam? That means Apple doesn't have their partnership under control anymore. Maybe they'll take it off the iPhone. Maybe they'll take it out of Siri. They'll lose all that data. So there are some reasons in the background. From a feature perspective, I don't think there's much they can add based on this acquisition other than what they already had.
In terms of integrating into Apple Music,
right. I mean, they could probably add like a module in Apple Music, some new social functionality. What are the most tagged songs? What are people listening to? Maybe they can pick up data about what song, let's say there's a particular song that's gotten so many hits this week, maybe they'll push it up the charts. So there are ways to integrate it, but I don't think there's many more ways than it's already integrated that we're really going to see super visibly.
Music has become increasingly important to Apple's bottom line. We do have a chart here in the Bloomberg G hashtag BTV3938. You can see how Apple's music revenue, services revenue, has climbed. Bob, what do you make of the fact that Apple is doing this when this is a company that, was really cool and buzzy a few years ago, but, obviously didn't reach the potential that some investors expected it to?
Two things. Number one, HomePod. I think that they're trying to figure out ways to beef up whatever they can. I mean, like Mark said, though, they already have this capability there, but they need to make sure they can control it. Music is the top application that pop requests people make of smart speakers. They want to make that experience as good as they can. But number two, I think if we think about Shazam, it was really one of the earliest versions of an AI feature. It was the ability, it was pattern recognition at a pretty impressive level. They brought it in, and I think the idea that they can leverage some of what they've done with that AI into visual areas and other areas that Shazam has started to do is interesting. But the valuation question to me is a reflection of the fact that so many people have been talking about AI as if it was a product, and to me, AI is more of a feature, and as a result, it's not quite as valuable, and that's why I think we're seeing the pricing the way we are.
And Mark, there's some question as to whether Apple will now use this exclusively or whether it will still be open to other entities, correct?
Yeah, and it'll be interesting to see. I mean, I could see it going both ways. Apple Music is based on a product called Beats Music that Apple acquired for $3 billion back in 2014, I believe. They kept it on Android, and not only did they keep it on Android, they came out with an Android version. So now they have a team of Android app developers. So it would make sense that they would keep it around, but also maybe they'll want to make it exclusive. I think we'll know in a few months.
All right, Mark Gurman, Bloomberg Tech. Thanks so much. Bob O'Donnell, Technalysis, you're sticking with me. Coming up, voice-activated speakers are expected to be a top holiday gift, but some consumers remain wary about privacy. We're going to dig into the technology next. And this Tuesday on Bloomberg Daybreak America's Cameron and Tyler Winklevoss, co-founders of Bitcoin exchange Gemini, will join the show. You can catch that conversation 8:30 a.m. Eastern Time. This is Bloomberg. German shoe manufacturer Birkenstock is breaking up with Amazon. The company says it will stop shipping any of its products to the world's largest online retailer in Europe and alleges that the Seattle-based company is sitting on its hands as criminals sell counterfeit versions of its shoes on its marketplace platform. Earlier in the year, Birkenstocks had ended its business relationship with Amazon in the U.S. because of a, quote, breakdown in trust. Staying with Amazon, recent concerns suggest that the popular Alexa speaker and other line of voice-activated assistants pose a threat to user privacy. Devices like the Echo and Google Home contain microphones that collect and send data from consumers' commands back to their parent companies. But the companies explain that it only collects data once the keyword, like OK Google or Alexa, is spoken. Joining us now, Bob O'Donnell, president of Technalysis Research and our guest host for the hour, as well as Brad Stone, our senior executive editor of Bloomberg Technology, who wrote about this in the daily newsletter Overdrive. So, Brad, the argument you take is that concerns about U.S. user privacy may be greatly exaggerated.
Yeah, and let me put this in some context. Last week there was an article in Gizmodo that said, don't buy anyone an Echo. The ACLU has warned against these devices. Cory Doctorow, a very respected writer over at Boing Boing, said it was normalizing surveillance. And here I am, and I've got Echoes and Amazon Dots in pretty much every room at my house. So I was sort of rationalizing it to myself. And I mean, look, if you do look at the privacy precautions Amazon and Google have taken with these devices, they're very explicit. This is not recording everything. It's in a passive mode, listening for the wake words. And when it hears the wake words, it sends your command up to the cloud. And you can go on the app and you can look at what they send. That's not to say we can't conjure some hypothetical scenarios that might get us scared, but you have to go through a couple leaps of logic to get there.
Well, and trust is important here, and we definitely have had situations where trust has been undermined by some of these tech giants. What if the devices are hacked? What if, you know, Amazon corporate says we're not listening, but there is someone who is?
Right, it's a good question. They've taken a couple precautions. One, they don't let third parties or developers just load apps onto the system. They have what's called skills, and they go and they monitor all that stuff. So it's not an open platform like even Android or Mac OS, right? It's very curated. Number two, it hasn't happened yet. There have been some third-party researchers that have demonstrated from vulnerabilities, but they've always gotten in and had to take apart the device. So until someone can just show a remote hack, you know, we have to sort of suspend our disbelief.
So, Bob, should we be scared or should we trust them?
No, I mean, well, look, we have to be cautious always with this stuff, but let's not forget all the nanny cams and all the cameras that were already, broadcasting all kinds of stuff.
Computers,
I mean, there's been so many examples like this already. This is not any different in that regard. Now, the issue is because smart speakers are so popular, it's impacting a larger group of people. But the other thing to remember is, as the technology improves, you're actually going to have a little bit less going up to the cloud, because right now, one of the problems with these smart speakers is they can only respond to one request: do this. Mm-hmm. They can't do a conversation. To do a conversation, they actually have to have more intelligence locally to be able to have a back and forth conversation, which means theoretically, over time, a little bit less goes up. Still potentially a threat, but as the technology evolves, I think we'll see an evolution there.
And
too.
look, there are conversations that they indeed are listening to, and those conversations are going back to headquarters. I mean, my kids are talking to Alexa all day long. Amazon doesn't necessarily want to hear all of that. But, should we be thinking about, what we're saying to Alexa?
I think that if you're running an illegal business from your home or committing crimes, you probably shouldn't say Alexa and then do that bad thing. In fact, if you're running an illegal business, maybe take the precaution of not having it in your home. Because one question is, could police authorities, could the FBI one day get a wiretap to go and alter the device enough that it is turned into an eavesdropping device? We haven't seen that yet. We don't know about it. I would suspect Amazon or Google would resist that, and they would have to change the architecture of the device, because right now it glows in a specific color when it's transmitting.
Now, you've covered Amazon for many years. You wrote a book on Amazon. How do you think the Echo falls in, whether it's, we talked about the Kindle and the Amazon phone. Do you think this is going to be a completely transformational product?
It's a successful attempt, unlike the others, I would say, to create a platform. In this case, Alexa, voice-activated computer OS that they want to now extend into the workplace and into our cars. Kindle and Fire phone were attempts to create a platform to kind of catch up to Google and Apple that were sort of promiscuous in their failures. And here, Amazon has struck gold, and you have to give it credit. It's the third time.
All right, Brad Stone, our senior executive editor for Global Tech. Thank you, Bob O'Donnell of Technalysis Research. Bob, always great to have you here on the show. And that does it for this edition of Bloomberg Technology. A reminder, we are live streaming on Twitter. Check us out at Technology, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg.